afternoon, everybody. It's Maynard, Mike, Matt, and Colin back with another installment of Close of Business Tuesday. We've got a returning guest today. We've got Les Csorba, and he brought with him Mark Zorbas. They're both from Heidrick & Struggles. And what we're going to talk about today is one of the most difficult yet important topics any organization faces, which is culture, how you build it, why it matters, what it really affects, how the CEO is an important part of it. Heidrick has recently done a study where they talked to 500 CEOs globally, and so they've got some fantastic information and observations to share, and we can't wait to get into it with them. So Les and Mark, thanks so much for joining us. It's fantastic to have you guys.
Thanks for having us, Maynard.
Yes, thank you.
Well, guys, let's tell Les and Mark and our audience what's going on in the world. Mike, what do you got going today?
Yeah, Maynard, it's a pretty mixed bag today. As you know, and most other people know that, we're coming up on a Barclays Energy Conference here. It's going to begin tomorrow and go for the next 3 days. So I think a lot of people are focused on that. But, before we get to that, I just want to kind of, give you an idea of what we've been looking at here today. If you can see on this chart today, it's one of the things that people are looking at a lot right now is what's going on in the Gulf of Mexico. In the Gulf of Mexico, if you look at this chart, we really started shutting in production around the 25th, 26th of and it was around 1 million barrels shut in right here, and gas was about 1 BCF a day, and it really peaked, on the 29th around 1.7 million barrels a day and 2.1 BCF a day. And you should, go forward to the day and you realize that we're still at roughly 1.4 to 1.5 million barrels is still shut in, and 1.7 BCF a day is shut in. And so they're only recovered around 17%, for each of these. And in total, you've had almost 20 to 21 million barrels a day have been lost in total, and around 22 to 23 BCF a day in natural gas. So that's been very, very helpful for crude oil and natural gas prices. The second thing I want to talk about is, Barclays is coming up here, and so we haven't really had much to talk about. If we look back in this chart, this is when the last real energy conference happened. That was J.P. Morgan. Our conference was about a week before that. And you can just tell where commodity prices are. They've only moved down a little bit. The energy indexes have moved down a little bit more here. But the big star since the J.P. Morgan conference is natural gas strip. And this last thing is performance since Q2 earnings have been reported. And you can say the commodity and the energy equities have kind of moved the same, and still gas is the real standout here. So, a couple things I think we're going to hear from this conference. I think what we're going to hear from this conference, it's going to be one theme: capital allocation, and what that means for 2022. I don't think you're going to hear a lot of companies talking much about it. They're going to be asked about it quite dramatically. But that's just a little bit too far ahead for them to be thinking. So I think what you're going to hear is a lot of what you heard on Q2 calls. I think one of the bigger questions also will be, okay, the equities have kind of lagged a little bit here. A lot of these equities are factoring in $49, $50 oil. The natural gas is factoring in $2.75, and that's substantially below where the strip is right now. I think one of the areas that we saw as the major use of proceeds was this variable dividend and the fixed dividend, and some of the companies in the Q2 calls really started talking about the stock repurchases, given a little bit of the widening out between where the strip is and what the commodities are dialing. I think you're going to hear a lot of questions about, hey, what about stock repurchases at this point in time? And so that's what we expect to hear. I mean, it's going to be, it should be a good conference. It'll give guys a lot to talk about. But in the end, I don't think you're going to see many issues that are come up. It's just going to be about capital allocation. What you heard on Q2 calls and what you heard from the J.P. Morgan conference are probably going to be the same things you hear. It's capital allocation in totality.
So, Mike, we're going to give you the Miracle on 34th Street Award, because you not only mentioned Barclays, you mentioned J.P. Morgan. I mean, there's just, we talk about other firms' conferences. I mean, anything to help the audience, right, Mike?
Got it.
All right. Matt Portillo, what do you think about all that? What else is on your mind?
Yeah, Maynard, a couple quick things. One, just as a reminder, we have our Sprayberry to Mayberry RNG conference coming up next week on September 15th. And as Maynard always likes to say, he could be your TPH contact, but if you'd like to sign up for the event, feel free to reach out to your TPH rep, and we'll get you signed up for that conference. In terms of Mike's conversation, it's actually extremely relevant. The research team's been out back on the road marketing again. We're going to have a very heavy client-facing marketing schedule in September. But actually, our midstream team was out on the road last week and picked up some interesting tidbits from a conversation perspective. We're now actually seeing midstream investors that historically had truly just focused in the midstream space start to look across the broader energy spectrum for yield. And what's occurring here is we're starting to see a big shift in that return of capital strategy, where the upstream names, the integrated names, and the midstream names are all starting to compete for capital. And it's a pretty captive market in terms of dollars that are being spent today. So just wanted to walk you through kind of the two salient points that we're speaking to investors about, how they're thinking about the space and what this could mean going forward. So as we start out on the upstream side of things, looking at either the U.S. Oily names or the Canadian seniors, the leverage profile for the sector is in a very healthy position. Our coverage universe strip is running about 0.5 times leverage in 2022, and most of those names are offering you high single-digit or low double-digit yields, whether it's a combination of buybacks or dividends. That makes it extremely competitive, especially given that that's about a 50% free cash flow payout ratio with the midstream sector. Midstream yields are still quite high. We're around 7% on our coverage in 2022. But about 70% of the free cash flow is going to cover those yields. And leverage is a big focus for midstream investors today. They'd like to see a lot more leverage come out of the system. For context, our midstream coverage is running leverage profiles into that 3 to 4 times range. So effectively, in the upstream space right now, while you're starting to see some competitive mind share is lower leverage, higher return of capital, and lower free cash flow payout ratios, which is making those fairly competitive. When looking at the integrated space, it's actually extremely competitive as well. When kind of looking at the U.S. integrated to the European integrated, leverage is below 1 time, and the yield profiles are approaching high single-digit or low double-digit yields. So this is a really interesting market. Where we're not seeing as much interest is in service. Service right now, we're running about a 2 times leverage ratio in 2022, and for the most part, there is no yield in the space. And so service stocks at the moment are generally being traded for trading vehicles alone. You're not seeing a lot of sticky long-only money come into the space because they're not offering that yield profile. And then lastly, the chems in the refining space, leverage is kind of middle of the pack. We're generally running around 1.5 to 2 times leverage with a mid-single-digit yield, whether it comes through buybacks or dividends, and that's about a 50% free cash flow payout ratio. I think this is going to be a really important theme going forward. Until we see more new dollars coming into the space, this is going to be a competitive fight for dollars. And right now, yield is a very important topic, as well as leverage profiles for the broader space. And so it's something we'll be digging into. We're seeing a lot of investor interest in it. And I think it's going to be something that's going to be a dominant theme in 2022 that may start to differentiate subsector performance next year.
All right, Matt, that's really interesting stuff. Let me continue with your theme and yield the floor to Colin Fenton.
Thanks a lot, Maynard. Well, just a couple of points this week on commodities and global macro. The first point is U.S. oil products demand reached a new all-time high in the week ended August 27, 22.82 million barrels per day, according to the EIA. So think about that for a second. U.S. oil demand is higher than it's ever been before. Gasoline is up over 2019. Distillate is up over 2019. Jet is down, but truck vehicle miles traveled are 9% higher than 2019. So really strong numbers. The second item, gas prices in Europe continue to roar to new highs. It just underscores that structurally there's going to be demand for U.S. natural gas to be shipped to Europe and Asia in the form of LNG. And the prompt Dutch TTF futures price that we've shown you several times in recent months is now closing in on 55 euros per megawatt hour. That's a 100% increase from where it was in the spring. Aluminum prices also in motion. You probably saw there's been a military coup in Guinea. It's the latest stimulant behind the prices. Notably, it's not just the 3-month price. The DEES 22 future is now above $2,700 per ton. That's 32% higher year to date and is running at an annualized inflation rate of 50%. When we look even closer in, the December 21 2,700 calls now fetch more than $163 per metric ton. And that's for a product that's only $70 in the money with a December 13 expiry. So just a very strong, confident view that prices are going to move even higher in the next couple of months, which they probably will. Now, finally, warning signs. We're seeing a really strong bid for the front end of the Fed funds future curve, Eurodollar curve, and the various US Treasury futures. And yet we're seeing selling pressure further out. And so, pretty clear story there. Markets are getting very nervous about these impending budget battles over the next 3 weeks. We have a $3.5 trillion spending bill that supposedly will be voted on before the end of the month. And we have the US debt ceiling very much in play. The specific debt ceiling is $28.401 trillion. And as of September 3rd, the US public debt outstanding stood at $28.427 trillion. So we're already $26 billion above the level, and Treasury is what's making up the difference. It's already drawn down more than $95 billion of its cash account, which now stands at $262. Now, $262 billion is a lot of money, of course, but not really for the United States government and the level of spending that it's running at. So in the very near term, we may see some fireworks here in global macro that will reinforce that notion that we've got to get the debt under control.
That's awesome. Colin, do you mind just repeating those upfront macro stats again for just U.S. oil demand? Those were really fascinating and I think worth a second go round.
Yeah, I don't think a lot of people have really noted it because what you hear in the news every day is that the Delta variant or some other variant of COVID is creating demand side pressures. And that explains the stock market kind of petering out and all sorts of other explanations. Well, the fact is that it's all-time high demand, 22.82 million barrels per day, which does not at all foot with the narrative that oil demand has peaked. Gasoline is at 9.58 million barrels per day. Distillates at 4.39. And here's a gem. Jet is at 1.8 million barrels per day. It's 4% lower than 2019. But at the low in 2020, that number was 352,000 barrels per day. So just really strong demand any way you look at it. Now, it is worrisome when you see the Eurodollar market and the Fed funds market, inching back towards that flight to quality. And so we'll see what happens going forward. But for right now, there's a very real reason that we're seeing the very strong draws on inventory and the prices that are in the market.
Very fascinating. Great job, guys. Let me do just a slightly more meaty introduction to our two guests because I want to go into the detail because it's great setup. I'll start with Les. We had him here before. It was great. You guys probably all remember that he's part of the CEO and board of directors practice as well as the industrial practice at Heidrick. He worked in a White House. You've probably seen many articles by Les in various places, the Wall Street Journal, the Chronicle. He's a go-to guy when it comes to everything that's happening with senior management and with boards of directors. And we're really excited to have his partner, Mark Zorbas. He's in the industrial practice, as is Les. He's been doing this for 20 years, thinking about organizational issues, organizational capability, culture across the globe, really, and across different sectors. He was at Chicago Bridge and Iron as the chief people officer, and also worked at McDermott and BHP Billiton. So he's got a lot of experience both directly and with energy clients around these issues. And the issue is culture and why it matters and how to create it and what it touches and what are all the nuances. So let me stop and just say, Mark and Les, we're so glad to have you guys. And we're really excited. We'll attach, if you don't mind, the summary of your report when we send out the blast. But let's think about where we can start. One question I have is, your topic here is aligning culture with the bottom line, how companies can accelerate progress. when we talk about culture, do you think that's a universally understood thing, or is it just an amorphous concept that half the time people aren't even talking about the same thing? What do you guys find?
Maynard, thanks for having us on. It's always great to be with the team and talk about one of our favorite topics. Culture is interesting because you do get lots of different definitions and descriptions of what corporate culture is. Perhaps the best way to describe it, Warren Bennis, who was a leadership guru at the University of Southern California, has written extensively on leadership and culture. He once said that a leader doesn't just get his message across, he is the message. So every leader has a shadow, and thereby every organization has a shadow or a culture. And so organizations tend to take on the characteristics of their leaders. And so my partner, Larry Sen, who founded Sen Delaney, which is the culture shaping firm we acquired many years ago, he coined this notion of the shadow of a leader. And the shadow of a leader or a shadow of an organization, Maynard, are the values, the habits, the behaviors, not only when things are going great, but also when an organization is under stress. And so that's how I would describe culture. Culture, really matters. It matters more than I think we all realize. And this recent study that we conducted with 500 global CEOs makes the connection between culture and the impact on financial performance more than I think we ever even realized. And perhaps, Mark, you have a point to make there.
Yeah, no, thanks, Les. And actually, just to build on the topic of Larry Sen and Sen Delaney, which Heidrick acquired 10 years ago, Larry was actually an engineer and was a management consultant, was working, these are decades ago now, in the 60s, and was working with some firms looking at how to accelerate their performance through operating models, through processes and so forth. And he was working with two clients where they said they were very similar in terms of their structure, their processes, their markets, but one of them was able to outperform and pivot better than the other. And that's where he got interested in looking and seeing that the CEO of that company was much more visionary, purposeful, was able to really see that, aligning his team around clear purpose and behaviors and how they work actually made a difference. And so that's actually what sparked Larry to do a PhD into the personality of organizations. And in fact, he said that company was Walmart, was the company that he was working with that was able to outperform its competitors. And so that sparked his interest. And through that, there's been decades that they've worked supporting organizations. And I think, one of the things we find, and this study's gone back and shown that again, is that CEOs and leaders who are very intentional about what their culture needs to be and aligning that with strategy and their operating model are getting the benefits of heightened performance. And I think as we share some of the information today, it's become even more important, I think, post-COVID, where there's been a lot of disruption to organizations and a lot of CEOs and leaders we speak to are worried about how they continue to preserve and nurture their culture. And then also with the transition going on in the energy sector as well.
Well, see, I wasn't aware of that acquisition. We almost need to dive into it and understand how that cultural integration went of the culturally focused firm. But
that's right.
I don't know, maybe, had to come back to that. Well, I guess one thing in the article, guys, there were a couple of things right in the study. Is one of them was, this is just, I won't get the words exactly right, but basically it was like everybody says it's important, but then not so many people said it has something to do with financial performance. And you guys were highlighting, wait a minute, you said it was important, but when it comes to financial performance, a lot of CEOs said, yeah, it's not one of the key things. Do you want to unpack that a little for us? Because I thought that was, one of the more striking parts of the discussion.
It's a great point you bring up, because in the study itself, interestingly enough, 82% of the CEOs said that culture is absolutely important when it comes to financial performance. But then when we dived a bit deeper and asked them to rate what were those real drivers of financial performance, 74% of those 500 CEOs didn't include culture in those top drivers. So they had things like strategy and leadership, policy and processes, operating model, that culture was further down. So there was a recognition that culture was important, but they still didn't weight it, when it came to looking at that, what really differentiates financial performance. Interesting, though, is that when we sort of dug a little bit deeper, there were some CEOs, and it was about 11% of that CEO population, who really did put culture as one of those top drivers of performance and financial performance, and had it in the top three. And those leaders, we dubbed them as culture accelerators. And so we did a little bit more research and looking at what were some of the commonalities between those leaders. And we found that those leaders were intentional about culture and intentional about aligning culture with strategy. In the last 3 years, they've actually spent time working intentionally on the culture of their organisation. And also they saw it as a real strategic asset for the organisation. So right from the top, from the CEO down, these accelerators were driving culture. And so then we also did a little bit more analysis and found that actually for those companies that had these, what we call culture accelerators as CEOs, they actually had double the annualized revenue growth over 3 years than those CEOs and companies that didn't have that culture focus. So it's just an interesting correlation there as well. And then we also dug a bit deeper and found an even smaller group of those CEOs that we called cultural connectors. These were CEOs that not only saw culture as being a strategic imperative, but they actually went further to really commit to that broad engagement in the organisation and saying, how do we act as not just purposeful leaders around culture, but how do we get this cascaded in the organisation? How do we hardwire it into our systems? How do we, align it into our people processes? How do we reward and recognise people and so forth? And again, those leaders were, again, showing superior financial performance compared to some of their peers.
Yeah, I noticed on the cultural connectors, which again, your terminology is, so you've got all CEOs, and then you've got the people who really love it and embrace it are the accelerators, and then these connectors were like your, I guess United would call them global services. This is the top group that's really into it. And your comments on them were, these people really drive a lot of conversation. This is anecdotally as I recall it, but they drive a lot of conversation. They're very open. They're very transparent. They've tried to get as much of the organization into the conversation as possible. And I guess that's just kind of striking because, they're not making strategy in the corner office and then announcing it in a highly inclusive way to the team. They are getting the team to make the strategy. These are, I'm summarizing, but is that how to think about these connectors, which are the top CEOs?
Yes, that's right. Yeah, they were intentionally talking about the culture, but also it was two-way communication. It wasn't the CEO and some others getting into a room and saying, "Look, here's our strategy. Here's what we think our culture needs to be to build the capabilities to deliver on it." They actually had the conversations with the organisation and were constantly talking about it, talking about the stories and drawing those links of how their culture is going to enable them to actually deliver on their strategy. And it's actually interesting. It's not unique to the energy sector and organisations where they've had to be really deliberate in shaping a culture of safety. So, if you go back a couple of decades ago, organisations were very focused on how do they get safety from being a compliance issue to being part of their culture and DNA and how people operate out in the fields and sites. And you mentioned, Maynard, that I worked for BHP and some years ago, BHP in the iron ore business had some fatalities which really threatened operations. And I remember at that point, it was a real pivot point for the asset group. And the president of that asset group, after we did some investigations and were looking into the behaviours of leaders from the bottom up, said, "You know what? We will be successful in safety as an organisation when our culture becomes our operating system." And that was really the power of where that culture comes into it. And so, again, these culture connectors recognize that and how this builds into the capabilities they need going forward. Very deliberate and always talking about it within the organization.
Maybe, Les, I could ask you a specific question because, one thing as background here is this survey. So you had over 500 CEOs, 20% were in the U.S., but then you had, the rest of the countries, 10%. So it's very global. It's energy was 20% of it, but there were other industries, technology, financial, healthcare. And then you also did by revenue and by employee count. So it's a very diverse group of companies. But here was the question I had for you, Les, because I'm thinking you've run into this. So here in this survey, you had these CEOs saying, oh, culture is really important. But then when you dug into their financial drivers, they said they didn't have culture as much as you might think they would. Isn't that another way of saying frequently there's a lot of CEOs talking about culture, but is it really happening and do they really have the culture they think they have? I think is maybe, or any organization, any leader tends to think they have a good culture, but do they really? This is a little off course. What do you think?
I think what Mark described between, in defining the culture connectors, those that really are serious. I mean, everybody, in the energy business in particular, we hear CEOs and executives talk about how proud they are of their culture, but we're not talking about posting a bunch of values on the walls for everyone to see. The kind of culture that we're talking about in our study, these culture connectors, are the leaders that intentionally model those values every day. So it becomes part of their DNA, winning together, collaborating, creating an ownership, accountability cultures. And so, yes, Maynard, there is a bit of a disconnect. But what we want to try to show in the survey and share with clients is, look, if you're really serious about culture, you really need to be intentional and purposeful about it. And it's going to have real results. It's really going to translate to bottom line results. And I think that's what the study really shows.
Maybe just jumping on to one of the topics you mentioned around COVID and maybe the shift in the work environment. I know the study briefly touches on it, but I'm curious how kind of the hybrid work from home business model has influenced the ability to execute on cultural targets and how you think about that more broadly as we see a shift in the dynamic of how organizations are going to work moving forward.
Yeah, look, I think it's actually heightened the need for executives and CEOs to be even more deliberate and intentional about their culture and more purposeful in terms of how they look to lead and operate that business. So in some ways, it's actually helped accelerate people looking at that because there was a real fear as people switched to remote work and then back to a hybrid and now still trying to work out where the future is going to land. They were very worried about what happens to their culture when people aren't meeting during the day, offices next door, lunches, those sorts of things as well. And so we have found that, as an organisation, in some ways it's worked better for organisations because it's stimulated the conversations for them to define what is our culture, what are we, what do we need to be, and what does a hybrid model look like? And then questions around that. So if we are thinking, and some CEOs are looking forward, saying, okay, let's assume the way we're going to work is never going to be exactly as it was prior to 2020, then what are the adjustments we need to do across our organisation to make sure we can still have a thriving culture? So how do we make sure that those employees who are not showing up to the workplace feel just as included, involved, and with a career path as maybe those that are turning up and having those interactions? So how do we make sure we're building in the people processes, the ways of operating, and those leadership capabilities to be able to run a hybrid model? And also, what does it mean for our culture? So let's get more clear around what are those values and those behaviours that are going to be critical for our company to run in that environment. And let's get very deliberate around how we want to instill those values and behaviours so it is successful. I think, Maynard, the question you had before around, CEOs see that, understand, they talk about culture, they know it's important, but then when push comes to shove and they're really ranking what drives financial performance, it tends to take a lower step. Part of that is because a lot of leaders haven't got a playbook on how to really address culture. They know it, they understand the value, but they're not exactly sure what are the levers you pull, how do you approach trying to shift or shape a culture going forward. And I think that now, Matt, going back to your question, is again where we're seeing some leaders actually taking some time to think about that game plan, that kind of roadmap. What do we need to do and how do we need to be more intentional about this going forward as well?
And I would just add to your question, Matt, on COVID, and Maynard, you and I have talked before about the governance crisis in energy. You know, we boards in the energy business are under a lot of pressure for obvious reasons. What we have seen is certainly it's been beneficial to have virtual board meetings. You don't have to travel. You don't have to get on a plane. You can get together. You can have more meetings virtually. The downside is when you don't get together and you don't have those board dinners and you don't interact with the executive team, we're seeing a little bit of a cultural disconnect there that worries me a little bit about the virtual environment, particularly in the boardroom. Now, some boards are starting to meet together again, but I wonder about whether or not they'll go back to 100% participation in person. And I think there's a real downside to that in terms of engagement with the team, engagement with one another over dinners. So that is an unfortunate consequence, if you will, of the pandemic.
So one question, guys, as you went through this is, and you talked about it, you've got 4 principles here, which you characterize as sort of the key principles around all this, the 4 principles of culture shaping. And you talk about purposeful leadership, personal change, broad engagement, and systemic alignment. And of those, systemic alignment honestly really got my attention, because that means, as I read it, does everything in the organization align with the culture? Everything from hiring to onboarding to the review process, does everything actually line up? And I just, would float a theory, which is one of the reasons why, some CEOs are saying I have a great culture, but yet it's not the case, is they haven't gone through the organization kind of line by line, system by system, approach by approach, and asked, is that really aligned with what we're all about? Is that a fair characterization of this one?
Yes, it is. And I think that's where we've found, those 4 principles you spoke about, the interesting thing is they're all interconnected. So not one of them really kind of goes without the other. Like as Les was saying, it starts at the top. A culture is a shadow of its CEO and leadership team, and they have to be very purpose-driven and purposeful about what they do. From there, it is about cascading down all layers. So there's that broad engagement, and then also being able to look at that aspect of personal change, because it is around behaviours and mindsets. Even if you do all those things, but you've got your current existing people processes, as you say, how you go out, what you're looking for in terms of performance and what you reward for performance, who you promote, how you go about hiring, how you onboard people, what are they hearing? What are the things that in those processes that they're hearing that are important? So if a new person starts at the organization, what are they learning in that process around what matters and how things get done at that company? And likewise, how they're setting up their conversations that year when they look at their own performance, their goals, their metrics. So these are things that actually are very powerful in sustaining. And you do get cultures that have people processes that are counteractive to what they're trying to set up.
Well, it's totally obvious. But if you say we just care about the team, it's all about the team, and then you have performance metrics, which are what did you do?
That's right.
Okay, that's an obvious one. But maybe this whole thing is about the link between culture and financial performance. Matt, I'm curious, you're a research analyst who is covering companies looking for financial performance. One of the things this paper suggests is where you find good culture, you will find financial performance, do you try to look for culture in companies? Do you try to figure out how they make decisions, what it's like to work there, kind of this, elusive thing that you try to measure that might be an indicator of whether or not the company is going to perform financially? Do you ever think like that?
I think where it really gets reflected is investor sentiment around confidence in management. And what we tend to see is that companies that have a strong culture tend to be companies that tend to execute on what they've told investors and tend to follow through on their promises. And ultimately, that tends to get reflected in greater investor confidence, which ultimately ends up in longer-term shareholders owning the stocks through the cycles, which energy is obviously very cyclical in nature. So it is actually something that surprisingly comes up a lot. It isn't something that we've necessarily put a quantitative metric around, but I do get that question a lot in the energy space in particular, just given all the volatility we've seen and all the changes we've seen in the industry over the time. Investors we speak to are very interested in the cultural backdrop of a lot of the companies that we cover.
Yeah, Maynard, I think it's a great point. I've often wondered why analysts, obviously they ask a lot of questions about free cash flow and leverage and returns and so forth, but I wonder why they don't ask about the issue Matt is bringing up, which is, tell us about your values and your culture. And by the way, is there alignment? And I'm glad you brought that up because alignment is critical. Are we aligned on safety? Are we aligned on our environmental stewardship? Are we aligned on how we spend, in terms of frugality and how we think about that stewardship mindset from a shareholder perspective? I actually think analysts and investors would get a lot more out of those calls if they dug in to some of these cultural pieces, because they really do matter at the end of the day.
Yeah, I was just going to add to that as well, that in this study, we asked that question around how a thriving organizational culture affects financial performance. And actually the number one, which 43% of CEOs said, was that it enables resilience in times of crisis. And again, I think that's been, that in the forefront of their mind was the year we've just gone through. But then to Les's point, the second, which was 34% of CEOs, said driving alignment for effective decision-making. And then it continues to cascade everything from driving innovation to really getting effective collaboration, retaining good talent, being able to accelerate accountability for delivery and things like that as well.
An interesting thing to me would be in your experience, is it easier to change within the culture or bring in new management to change the culture? And secondarily, what's the time, what's the performance or time period you should be looking at to decide whether that culture is working or not? Is it 6 months? Is it a year? Is it a couple of years?
Yeah, Mike, it's a great question. And we can look at the history of our industry and see organizations that have created cultures over many, many years and decades. And, they tend to develop and promote from within. And sometimes when you don't bring enough external talent to reinvigorate, if you will, the organization and the culture, you become a little stale. You could argue certainly before Macondo, BP had a certain culture that they became susceptible to. And they started to, recruit from the outside, perhaps. Other examples, we're now seeing certainly a major cultural shift at Exxon for the first time in many, many years have gone outside for their public company CFO. I think that's interesting. A lot of interesting sort of trends in our sector that suggests that culture is being changed, if you will. But Mark, I'll defer to you on the question of how long you really see culture shape take place over time.
Yeah, and look, that is a good question, Michael, and probably a difficult one to answer because for some organisations it can take years, and Heidrick and Sendelani before that, we would partner for 2 or 3 years for really to get it down to that systematic integration of culture and things like that. However, some organisations have pivoted quite quickly. Part of it's because they've had to. There's been disruption in the market and other external pressures which have helped accelerate that. But it does come down to just how strong the shadow of that CEO and that leadership team is on the organisation. Because if you've got a really strong shadow of personalities and styles and approaches, and if they themselves aren't personally wanting to go through any kind of shift or change in mindsets or behaviours, then it can be a very long journey, or it can be very quick if you can get that momentum early and really start to cascade it down.
So, Mark, that kind of gets to the question of wages and total compensation. And I suspect the ESG perspective would explain that disconnect between, the part of the survey said, yes, culture matters. And then now tell me the drivers of performance is because the CEO is focused on their total compensation. So it's not about the hundreds of employees. It's about the strategy that they and the inner circle came up with. In the study, was there anything that you teased out where you might substantiate income inequality as a legitimate, driver of some of these results, or not? And in particular, now that we have stakeholder as kind of the term of art, not just shareholder, I think it seems like more people are asking the question whether we ever maximize the shareholder return to begin with. Maybe the question was, you sort of assume the pie was maximized, but maybe these poor culture firms are maximizing the CEO's compensation and forgetting how hard it is for the person making $10 an hour or $50 an hour or whatever the number is in any particular industry.
Colin, I'll just make a quick observation. Just almost 3 decades now in the leadership business, and I'm not pointing to any specific compensation survey or study, but just my observation for whatever it's worth. It seems to me that the organizations that created an ownership structure in terms of compensation, pushed ownership and equity as far down as possible in the organization, are those the organizations that sustained over a long period of time and frankly had the lowest or the highest retention, if you will. I'm thinking of maybe a private company like Hillcorp, which has this ownership structure pushing it down. And I think that the public companies that have done that have benefited as organizations, in terms of the income equality issue as well. I think the more you have ownership in the business, the greater motivation and purpose you have to achieve that alignment around, what the company stands for. But that's just a general observation. Mark, I don't know if you have any other data or insights on that.
Yeah, no other data. And the study, Colin, we didn't go down to look down that avenue specifically. But I mean, what we do find is that those cultures where you've got what we call thriving cultures, where employees right down to the front line up to the top feel like they're engaged, got a sense of belonging, etc. You get more discretionary effort. You get people going above and beyond. You get people speaking up, sharing ideas, greater innovation. And so these are just natural occurring things that happen and it happens in organizations, it happens in teams. And so it is a piece that I think does get ignored when they're looking at value in a company, that a company with a really healthy culture also has higher levels of resilience. So they're actually able to weather some storms better than other companies as well.
Yeah, I mean, I ask it because we just had Labor Day here in the United States, obviously, and there's this disconnect between the number of people who are unemployed and the number of jobs that are supposedly available. And then you see these inflationary pressures, some of which, we've talked about up top. And it just feels like companies are now chasing it. They're all chasing each other to try to offer the first year, employee the higher number. And that to me is proof positive that management screwed up, that they did not keep in line with where industry was pushing. Now, maybe it's forgivable because who was going to predict a 50% annualized rate in aluminum, in part because you had a global pandemic. So, there's maybe some cover here of just absolute extreme drama. But all the times I can think of in history that we went through these kinds of environments, once you get wage inflation, watch out, because you better have a good culture once you have wage inflation.
Yeah.
I'm just curious, do you have any advice for the energy industry around a shift in the cultural practice? One of the things we hear most frequently is that retaining younger talent in the space now is becoming harder and harder. I don't know if there's a good solution to that.
Yeah, I think it's a great question. We talk about the talent issues in the energy business quite a bit with our clients. You know, I think everybody's tired of getting beat up, for the carbon issues and the GHG emission issues. And, and I think it's incumbent upon CEOs in terms of that shadow to be stronger advocates for the purpose of their business. We're far too defensive in apologizing for the products that we create and put on the market that literally have changed the world for the better. In terms of dramatically reducing extreme poverty and providing clean water and the petroleum products that went into the production of the vaccine. CEOs, the shadows that they create within their organizations need to make a more compelling argument for their purpose, precisely so that the younger people that are coming up, the next generation, feel a sense of purpose and motivation of the work that they're providing in the energy business. So I think that's a cultural issue. That's an advocacy that leaders need to really think about and be advocates within their own companies.
Les, on this point, I think it's fascinating because not only would it be good for our energy companies to be filling our teams with a sense of mission and pride in what we're doing, and that is important for our organizations, but honestly, the rest of the world, tell me if you agree, they're looking at us. And if we're not proud of what we're doing, and if we're not fired up and excited about what we're doing, they're definitely going to continue to have, misperceptions and flawed perceptions of us. Like if we're hanging our heads, it just reinforces their thoughts about, us being the problem.
Yeah, for far too long, the industry and our leaders, I think, have been defensive because they have argued that we can't make the case for ourselves because it's self-serving. It's a conflict of interest. But if I were to accuse you, Maynard, of being a mass murderer and you said nothing, and over time you said nothing, then people would think you're a mass murderer. You have to fill the vacuum and the void with the positive message that the energy industry provides in terms of providing this resource that has literally changed the world for the better. And now that doesn't mean we can't be focused on mitigating the carbon and the GHG footprint and have a strong ESG message, but there needs to be more balance and more advocacy. Well,
it's interesting. We usually don't talk about companies here, but I'll just use two. Chris Wright was with us, and he went through the Liberty ESG report, and he really leans into, before I talk about why I'm not bad, let me talk about why this industry and what we do is good. And it clearly animates his people and drives the spirit of the company. The other one I've seen recently is Phillips 66 has a lot of great communications, and when they do work in the community, they all wear T-shirts that say "Good Energy," and there's just it just seems core to culture to fire up your people about the mission and that what they do is good.
Yeah, and all it takes is the courage of one leader, and I think Chris Wright is starting a movement, frankly, that is creating courage in other leaders across the sector. And that will filter down throughout an organization. And I think that accrues to the benefit of a company in terms of retention, in terms of performance, motivation. So I think that's a really exciting development in our industry in the last several months.
Well, guys, you've been, we really appreciate you taking some time and walking us through this. There's so much. Culture is so important. Let me try to wrap up with one question for you, just out of curiosity. You guys visit companies all over the planet every day, management teams, boards, you see all these companies. When you're looking for evidence of a good culture, like when you're looking for that moment that tells you, aha, this place has a great culture, or aha, this place does not. What are the one or two little tricks of the trade that you've learned where you can spot a good culture or where you could spot a flawed or not performing culture? There's probably some little thing you notice that always is a bit of a tip-off for you.
Yeah, I'll start and then I'll let Mark finish. We referenced Larry Sen earlier, who's sort of the godfather of culture, corporate culture. He developed a really interesting tool, Maynard, to answer your question. It's called the mood elevator. And it's this mood elevator, and we operate in different moods each day. And the companies, frankly, and the research shows that when we operate at our very best, we are extremely grateful. And we're wise and we're creative and we're optimistic and we're hopeful and we're resourceful and we're collaborative. Those kinds of moods, if you will, or virtues that we see in organizations, it generally tells us that that's a pretty cool culture. That's going to be a culture that's going to perform at a high level. On the other hand, if you find a culture, an organization that's hostile and stressed and judgmental and cynical, they tend to operate at the lower end of that mood elevator. And so those are just some of the observations based on the mood elevator. And Mark, I'm sure you have some thoughts.
Yeah, no, I think that's a good question. And that mood elevator is really interesting because it kind of ties into my observation. And I tend to look at, if I'm going in and meeting with a leadership team, whether it's an executive team or it's a operating or business unit team, I look at the dynamics between that team. Does the leader of that team, or if it's the CEO, do they talk most and loudest and the rest of the team kind of default to that leader, or do they talk least and last? Are they open to what other people are saying? I'm looking for that dynamic where people can just be themselves, be honest, be upfront, and there's no big personality or some sort of fear where people are holding back, or it's very hierarchical in terms of decisions. So that's probably what I look for. And that mood elevator is really interesting because one of the clients we work for, which is a large energy company, their CEO went through the whole culture shaping program that we run. And he actually has the mood elevator outside their boardroom when they go in. And he starts the meeting by going around saying, okay, where are people on the mood elevator right now before we start our meeting? Are people feeling frustrated? Are people feeling like angry, annoyed, self-righteous, defensive? Or are people at the moment, where are you feeling? Are you feeling more wise and grateful, humorous, curious? And he actually makes people go around and then says, okay, let's see if we can shift it by the end of the meeting because we want to all come from a place of curiosity. And I thought that's really quite interesting how intentional he is about it. But yeah, I look for leadership and I look for the top leader to see what that team culture is. That tends to cascade down.
You think at some level, when people talk about culture, they're kind of asking, do the people in the company, do they feel like management actually cares about them? And when they feel like management actually cares about them, they care back. And when they don't feel like anybody cares about them, that's when they get cynical and bitter and annoyed and frustrated and all that. Is that just too simplistic? But sometimes you watch some of these things happening, you just wonder, like, gosh, why didn't people just care more to not let that happen?
I think that's well said, Maynard. I think it's an empathy. I think it's a compassion. Obviously the CEO still has to make tough decisions at the end of the day, but I think having that selflessness and that humility and that compassion so that people, feel like they're being cared for, but also, that there's motivation and purpose in what they do every day, and that organization or company will likely perform at a higher level.
Well, Mark and Les, you guys have been fantastic. We really appreciate it. This topic has got so much more we could dig out. Maybe we'll have to have you back for culture round 2, but for now, we just want to really thank you for doing all the work and synthesizing it so well. It's really great stuff.